Okay, let's unpack this. Today we're embarking on a deep dive into the recent financial results of Siemens Energy India Ltd. Our mission, as always, is to sift through the numbers and official statements to uncover the truly valuable insights for you, our listener, helping you quickly get well-informed on a major player in India's energy sector.
And what's, fascinating here is that our source material gives us two different perspectives, really.
Right.
We have one document that's basically a list of questions, sort of hinting at future Q1 FY26 results. But our main source, the one we're really drilling into today, is the official unaudited financial report. That's for the third quarter and 9 months ended June 30, 2025.
So Q3 FY25, that's the focus.
Exactly. This Q3 report is where the concrete, detailed data lies, and that's what we need to look at.
That's a crucial distinction, yeah, focusing on the concrete data. And concrete it certainly is when you look at these headline numbers for Q3 FY25. I mean, what were the absolute standout figures? What immediately grabs your attention comparing this quarter to the same time last year?
Well, the numbers really do jump out at you. New orders, for instance, they nearly doubled. Yeah, soaring by 94% to INR 3,290 crore. That's a huge leap from INR 1,693 crore in June 2024.
Wow.
And this isn't just a number, right? It signals Siemens Energy India is aggressively capturing market share. The demand for energy infrastructure is booming, and this puts them in a really strong position against competitors for, the next few years.
94% growth in new orders is, well, it's astounding. What does that really signal about the market they're in?
It's a clear indicator of just how robust demand is, both domestically and in export markets, too.
Yeah.
The company themselves stated that their revenue also developed very well. It was up 20% to INR 1,785 crore.
Right, built on that backlog.
Exactly, largely on the back of a strong and healthy existing order backlog. And then there's profit after tax.
Which also jumped.
Oh, yeah, shot up by 80% to INR 263 crore.
80%.
I mean, this kind of profit growth, and you combine it with an improved operating margin, 17.6%, up from 13.3%.
That's significant.
It really suggests not just high demand, but also excellent execution, good cost management, what they call continuous operational excellence.
Right.
And just quickly, for the broader 9-month view ending June 2025, new orders hit INR 10,765 crore, revenue reached INR 5,181 crore, and profit after tax was INR 741 crore. Just impressive figures all around.
Okay, so given these stellar financials, it really begs the question, where is Siemens Energy India directing this momentum? I mean, did they announce any big strategic investments alongside these numbers?
They did, actually, yes. They detailed a significant CapEx announcement, an investment of INR 280 crore. It's going to be rolled out in phases, apparently.
And where's that capital expenditure going?
Specifically, it's earmarked for expanding manufacturing capacity for their high-voltage switchgear products at their Aurangabad factory.
And what's the thinking there? Why high-voltage switchgear specifically?
Well, the company stated it's to meet growing demand for power transmission equipment. And interestingly, not just within India.
So globally, too.
Globally, yeah. So, this isn't just a simple factory expansion. It feels like a strategic doubling down on India's role as a global manufacturing hub for these critical grid components.
Makes sense.
It taps right into the Make in India drive and could, potentially reshape regional supply chains for these essential parts of the power grid.
That makes perfect sense.
Yeah.
So how are their different business segments actually performing? How do they feed into this broader strategy?
Well, if we break down the performance by segment for Q3 FY25, both power transmission and power generation contributed pretty significantly to revenue and profit.
Okay.
The power transmission segment, which is where that CapEx is going,
Right.
recorded revenue of INR 9,764 million. And profit from operations was INR 1,825 million.
And power generation.
Also performed strongly. Revenue there was INR 8,082 million, with profit from operations at INR 1,312 million.
So both are contributing well.
Definitely. And Guilherme Mendonça, he's the MD and CEO.
Yeah.
He explicitly linked their exceptional order growth and these robust results to, well, the strong domestic market and those rising exports we mentioned.
Okay.
And importantly, he connected the investment in power transmission directly to supporting India's energy transition and also the government's Make in India and Atmanirbhar Bharat vision.
Right, tying it all together.
Exactly. Which, raises an important question for us. How exactly does this investment in high-voltage switchgear really fit into India's long-term energy goals, especially with the grid facing increasing demands?
That's a fantastic question. So how does this investment fit? I mean, is it just about meeting current needs, or are they anticipating a huge shift?
Oh, it's definitely anticipating a huge shift. You look at India rapidly expanding its renewable energy capacity, right? Solar,
Yeah.
wind,
Big push there.
huge push. But these sources, they're often located far from where the power is actually used, and they can be intermittent. The sun doesn't always shine, wind doesn't always blow. High voltage switchgear is absolutely crucial for efficiently transmitting that power across long distances and for integrating it reliably into the national grid.
So it's about grid modernization.
Exactly. Modernizing and strengthening the grid to handle a much more complex, greener energy mix. So this investment, it directly supports India's energy transition by building that foundational infrastructure, the stuff needed for a reliable and sustainable power supply.
So it's proactive, enabling the shift.
Precisely. It's a proactive step to enable the broader shift.
That brings us neatly to another foundational aspect, Siemens Energy India Ltd itself, its structure. How did this company actually come to be, and how does that shape its financial reporting?
Right. Well, Siemens Energy India Ltd, as we know it today, is the result of a pretty significant corporate action, a scheme of arrangement, a legal process.
Exactly. It's a legal process where the energy business was essentially transferred or demerged from Siemens Limited into this new company, Siemens Energy India Limited.
And when did this happen? The National Company Law Tribunal, the NCLT, they approved the scheme on March 25, 2025, and the scheme became legally effective on that same date. But importantly, the appointed date was set retroactively.
Retroactively.
To when? To March 1st, 2025. And this appointed date is key because it means, for accounting purposes, all the financial activity of that transferred energy business is officially recognized as part of Siemens Energy India from that earlier date, March 1st, even though the legal nod came later.
I see. So that's when they started drawing the line for the new company's books, effectively. What happened next in this restructuring process?
Exactly. So following that, April 7th, 2025, that was the record date for share entitlement, basically who gets shares in the new entity.
Got it.
Then, on April 14th, 2025, they allotted the new shares 356,120,505 equity shares in a 1.1 ratio.
Okay.
The original sort of placeholder pre-scheme paid-up share capital of just INR 100,000 was then canceled. And finally, the shares of Siemens Energy India Ltd were listed. Started trading on both the BSE and the National Stock Exchange on June 19th, 2025.
So a complete spin-off and listing. Quite the process.
A very involved process, yes.
Okay, so that's a lot of corporate maneuvering. Now, given this unique background, the financial report itself contains something called an emphasis of matter note from the auditor.
Yes, that's right.
What does that actually mean for our understanding of those year-over-year comparisons we were just discussing? How should we read those?
That's a really crucial point to understand. The auditor, Pricewaterhouse Chartered Accountants LLP, included this emphasis of matter note, primarily to highlight something specific about the prior period figures.
Okay, what was that?
That the financial information for the prior periods, specifically Q3 and the 9 months of FY24, was restated by the management.
Restated by management. Okay.
And more critically, these prior period figures were, and I quote, neither subject to limited review nor audited by them, by PwC.
Okay. So the current auditors didn't review or audit the numbers they're being compared against.
Correct. It means those previous figures were put together under specific accounting rules. Rules for combining businesses that are already part of the same parent group, what's known as common control principles.
Right.
Specifically, Appendix C to IND AS 103, which deals with these kinds of business combinations.
So for us, the listener, what's the practical takeaway from that note? How should we interpret those year-over-year comparisons, knowing the history wasn't audited by the same firm under the new structure?
It tells us that while the year-over-year growth figures are, undoubtedly strong, you need to be aware of what you're comparing.
Okay.
You're comparing the current period's performance as a standalone listed entity with prior period figures that were essentially pro forma.
Pro forma.
Yeah, internally restated figures based on how the business would have looked under that common control structure. It's not quite a like-for-like comparison with fully audited results from an independently operating company in the previous year.
So it doesn't invalidate the growth trend, but adds context.
Exactly. It doesn't mean the growth isn't real, but it's important context for understanding the basis of those comparisons. And just as another sort of financial nuance from the report,
Yeah.
the company also recorded a provision of INR 546 million
For what?
for stamp duty, transfer fees, and other registration charges. It's a significant one-off cost tied to the property transfers from Siemens Limited during the demerger.
Right, another cost associated with that whole restructuring.
Part of the process.
Okay. We've really gone deep today into Siemens Energy India's Q3 FY25 results. We've covered, well, everything from their exceptional growth in new orders and revenue
Pretty staggering number.
to their strategic investment in high-voltage switchgear capacity and that significant corporate restructuring that shaped their financial reporting. It's clear, how their strategy connects tightly to India's energy transition and that Make in India vision.
Absolutely. And if we connect this to the bigger picture, maybe leave you with a thought. What do these really robust financial results and this very strategic capital allocation imply? Not just for Siemens Energy India, obviously, but for the whole competitive landscape, particularly in the power transmission segment in India.
Right. What's the implication?
Well, will we see other big multinational energy players feel pressured to follow suit, make similar deep investments to keep pace? Or does Siemens Energy India's aggressive move now potentially give them an unassailable lead in this rapidly evolving market? It's definitely something to watch going forward.